entire real estate sector has been pretty much falling off a cliff since the start of this year. And this is of course due to things like the Fed funds rates, which has been going up significantly ever since May of 2022 and now sitting at around 5.5%. Now with interest rates being this high as they are right now, it's of course making borrowing money very, very expensive, which real estate investment trusts or REITs are very, very sensitive to. But with the high potential of rates actually being cut over the next year or so, and interest rates somewhat stabilizing hopefully, I want to explain why I think the Vanguard Real Estate Index Fund ETF or VNQ could be a smash buy opportunity for investors that want exposure to real estate and are willing to weather the potential up and coming storm. Now stick around, drop a like down below, and let's get right into it. So first, let's talk a little bit about what the Vanguard Real Estate ETF or VNQ actually is. It's of course a Vanguard product, and the product summary is pretty simple. It says invest in stocks issued by real estate investment trusts or REITs, companies that purchase office buildings, hotels, and other real estate. The goal is to track as closely as possible the MSCI US Investable Market Real Estate 25 by 50 Index. Offers high potential for investment income and some growth. Share value rises and falls more sharply than that of funds holding bonds, and appropriately for helping diversify the risks of stocks and bonds in a portfolio. Now looking at VNQ's all-time performance on the max time frame since about 2004, the ETF is up around 47%, and that's not including dividends. Also important to note, the expense ratio for VNQ is pretty cheap, which pretty much goes along with most of the Vanguard ETFs at 0.12%, which means that you can get some exposure to some of the highest quality real estate in the world through the Vanguard investment vehicle and not have to pay an arm and a leg. Now also important to note, the assets under management are massive at almost 30 billion, making this one of the largest real estate ETFs across the markets. Now also very important to mention, when it comes to VNQ, we need to see what top 10 holdings are in this ETF to know if we want to have exposure to, of course, the basket of stocks within this. So the top holding of VNQ is the Vanguard Real Estate 2 Index at 12.6%. Then we have Prologis at 7.7%, American Tower Corp, which is a really high quality single stock that I love, at 5.71%. We have Equinix Inc. at 4.9%, Public Storage at 2.9%, Crown Castle at 2.9%, Welltower at 2.6%, Realty Income, of course, one of my favorites, at 2.5%, Digital Realty Trust at 2.5%, Simon Property Group at 2.4%, and all in all, 165 different holdings, which in my opinion might even be a little bit over diversified, but nonetheless, this gives you a lot of exposure to a lot of high quality single stocks without having to go through the work of buying each one of them on your own. Now with the year-to-date beatdown on real estate, the trailing 12-month dividend yield for VNQ is skyrocketing at almost 5%, 4.78% trailing 12-month dividend yield. VNQ does pay a dividend quarterly and doesn't really have all that much dividend growth, unfortunately. Although it could in the future, it just really depends on which stocks are within the ETF at whatever given time, etc. Now, dividend growth is a very important metric, and although VNQ on some time frames does have some decent dividend growth, because of the holding makeup, some of the stocks that have a big spot in VNQ have not necessarily had that much dividend growth, where others have had quite a bit. So what this has left us with is around a 9% dividend growth rate, and this was in between 2021 and 2022 of last year. But as you can see, from 2006 on, the dividends that have been paid over the last years have been sort of all over the place. And this specifically is one of the reasons on why I'm not ultra bullish on VNQ, to be honest with you. But like I said, having it as a satellite position, sort of a set it and forget it, low stress position that's well diversified. When it comes to having exposure to real estate in your portfolio, I still think it's definitely worth looking into. But like I mentioned a little bit earlier, a lot of the current pain that the real estate sector is currently feeling is of course because of the very, very high interest rates at around 5.5% right now. But if we go over here to the Fed Rate Monitor tool, you can see the predictions, or sort of the probabilities, if you will, of future rate hikes and future rate cuts. For example, January of 2024, there's a likely chance that the rates are going to be between 5.25 and 5.5%. But if we move to May of 2024, there's a higher probability that rates will be lower by 25 basis points or so, which is of course indicating the likelihood of rates coming down sometime soon over the next year or so. Now, for those reasons alone, I think that VNQ could easily be an ETF that's trading well above $100 once again someday soon, if and when rates come back down to where they maybe were a few years ago. Now, if you are in the camp and if you think that rates are never going to come down below, let's say 4.5% or so, then by all means, real estate investment trusts most likely are going to have a lot of struggle ahead in the next few years. But if you do happen to be an investor with a long time frame ahead of you, The upside potential for VNQ from here could be pretty great, considering it's not even trading all that far away from the lows in 2020. But when it comes to the Vanguard Real Estate ETF, VNQ, is this or is this not an ETF that you would want exposure to? Comment yes or no and let us know why down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.